Welcome. I'm David T. Phillips, CEO of Estate Planning Specialist, and your host each Wednesday for Estate Planning Made Easy, the podcast that teaches you how to keep your wealth in the family. Well, last week I kind of was, as one of my clients told me after a talk she heard, I was kind of a Debbie Downer for the week. I talked to you a lot about statistics on the number one longevity risk. And longevity risk in and of itself is a risk because if we live too long, some things are going to happen to us one way or the other. The market's going to go down, taxes are going to increase, we may run out of money because we didn't have enough stored for us. We may have to move in with our kids. That's what's obviously happening in our country today with the multi-generational home bust that's going on right now. We're seeing so many of them, especially new builds in multi-generational homes. And so, which isn't necessarily a bad thing, moving in with family, at least for us, but for them, they have to change their lifestyle, especially if we have to have care. And so one of the things that we talked about last week was the number one longevity risk. So longevity risk in and of itself is a risk. But the number one longevity risk is having a long-term care event. And long-term care, I'm talking about not your medical treatment in the hospital, because, Medicare will pay for the first 100 days in a hospital. But once those 100 days are up, they will literally boot you. I've seen it happen with my brother-in-law. They'll literally boot you out of the hospital and into your home. So that's a long-term care situation, and it's not something that we really want to be in. We don't certainly want to force our family into that position where they have to take care of us. And yet we know that there's currently in the United States, there's 38 million caregivers that are family members that are providing on average of 18 hours of care per week for a total of 36 billion hours of care at an average of $17. And it's not only that, it's when we force our children to care for us, we, again, force them to change their lives, but it also is physically and emotional on them. It changes them significantly. And so it's really something that we don't want to do. We can actually prepare and plan for a long-term care event before it happens. Now, long-term care insurance used to be the play, but it became very expensive, and it hasn't worked. And so several years ago, a couple companies came up with an idea called asset-based care planning. We've kind of changed the name a little bit to leverage care solutions, because really yes, it is an asset in your balance sheet. And yes, it is an asset that you can transfer to your beneficiaries. But it's more than that. It's leverage care. It's taking that dollar and creating $3 for care if you ever need it. And if you don't need the care, that dollar that you put into it, plus some interest usually, is returned to your beneficiaries. So it's not money down a rat hole. It's money that will either be received by you in a benefit, taking $1, creating a minimum of $3, and depending on the plan you get, you can actually have inflation riders in there, and it can create, instead of a $3 benefit, it's a $10 benefit. Your dollar now is leveraged and creates $10 for care if you ever need it. If you don't need it, the dollar is returned to your family. So it's called asset-based care. We call it leverage care solutions. And I wanted to show you, I'll have in the show notes, show you this diagram that I actually use in our report, the special report called Leverage Care Solutions, this report right here that you can get on our website. But I printed this one out because I wanted you to see it. And in essence, what we're doing with Leverage Care Solutions is we're just taking a little bit of the slice out of your estate, and we're leveraging that slice so that it becomes an expanded benefit. You're not taking the money out of your estate, you're just repositioning it. It's still part of the pie. It's no different than if you took some of your money and put it in a CD. But a CD is only worth what a CD is worth for care. If I have a $100,000 CD and I need care and I go to draw from it, how much am I drawing? I'm going to draw $100,000. With a Leverage Care Solution, I'm going to draw $300,000 minimum for my care. So that's the way Leverage Care Solutions work. And a very, very effective, very, very powerful solution for you. There are several different versions of Leverage Care Solutions. The one that is the most common and the oldest is what's called the Life Leverage Long-Term Care. And in that plan, you actually have a life insurance policy that is your foundation of your care benefit. And actually, that is the pool that you draw from for care. So if I have a life insurance policy that's worth $500,000, and by the way, it has to be permanent insurance, and I need care, I'm going to draw from that $500,000 life insurance benefit. And based on Section 6166 of the Pension Protection Act, I'm able to, the 2006 Pension Protection Act, I'm able to become the beneficiary of my own life insurance policy. And I'm able to draw down from that death benefit that normally would go to my kids, but now it's going to go to me. I'm going to become my own beneficiary at 2%, a minimum of 2% a month for 50 months. You can also do 4% a month, but then your time with drawdown is less time. It's 25 months. So we generally like to go with the 2% benefit for 50 months. And let's say, for example, my death benefit or life insurance benefit is $500,000 and I draw down from that. Well, that would be $10,000 a month. 2% of 500 is $10,000 a month. And I take that, and let's just say I draw down for 10 months and then I pass away. Well, I have pulled out of the plan the $10,000 for 10 months, $100,000, which would leave my beneficiaries $400,000 net. Now, I have a couple of podcasts that I want you to know about and go to. And you can find those podcasts on our website, epmez.com. You go into company on our website and go into videos, and there will be several videos there that I did on this concept, on Leverage Care Solutions, and on the idea in general. There's also a really helpful website called ROPLTC.com that we created that talks about the second kind of long-term care that I really like. And it's called the return of premium long-term care, the return of premium long-term care. And this particular concept it's about 7 years now, 7, 8 years. And in that, you basically take $1, you transfer it from your left pocket to your right pocket. It's still an asset on your balance sheet, and it immediately grows to $3 for care if you need it, but it has an inflation rider on it. And if you never need care, that dollar is returned to your beneficiaries. It's a cool idea. It focuses mostly on care. The long-term care benefit is paid out as an indemnity, similar with the life one as well, the life long-term care strategy, paid out as an indemnity benefit, which means that it's not a reimbursement. It's actually cash indemnity, where you receive cash from the insurance company, and that is used for your care. It can be for home care. It can be for a nursing home. Some of the plans are actually can be used for in foreign countries. But the idea is that this particular, the return of premium long-term care has an inflation rider that you attach to it. And the benefit usually is a 72-month benefit instead of a 50-month benefit. But your family doesn't get the life insurance benefit that they would in the life legacy. They get they get the return of premium, basically, is what they do. So now, on the website, in the show notes, I'm going to have a table for you showing you which of the plans are the best plans out there. It's going to be a little summary of the plans that are available today, and that'll be in the show notes. It was actually a part of our newsletter that I did in the November 2023 issue of Generational Wealth Strategies, a newsletter that you can subscribe to by going to generationalwealthnewsletter.com and subscribe to the newsletter. It's a newsletter that I produce with my son Todd, who's the president of our company, an attorney by the name of Rick Durfee, who is the founder and senior partner of the Durfee Law Group, one of the top estate planning law firms in the country, and Melody Gatz, who talks about charitable giving. And every month we come up with a newsletter with extremely valuable information that can help you with your estate planning, but also these ideas of repositioning assets for care. Remember, if you don't reposition your assets for care, you're going to draw from your family. Your family's going to have to take care of them. They'll be forced to take care of you. You're going to put them paint yourself in a corner, and you can't get out of that corner because you're just caught. And so transfer some of your assets today. The last leverage care solution, there's 3 of them. So there's the Life Legacy, there's ROP LTC. By the way, go to the ropltc.com site, and there's also a video that I did. It's on our website that you can get on that. And then there is also the third one is called the long-term care annuity. And it's actually been around for the longest of all of them. And succinctly, what it is a plan where you take $1, transfer it from your left pocket to your right pocket. It's worth $3 for care immediately. There's a couple of plans, a couple of variations of it. Some of them might be $2, some of them might be, but the one that if you can qualify for the $3 one, that's the best one to try to get. And in the $3 plan, your dollar becomes free for care, and then you're going to earn interest on the annuity. Okay, just like a regular annuity, it's called a deferred annuity. So you're going to earn interest on it. Interest right now is paying 4.5%, depending on the company. Not many companies have this, by the way, but you take the dollar, create 3 immediate for care, the dollar grows. And as the dollar grows, so does your long-term care benefit grow 3 times whatever the annuity is worth. If you never need care on any of these, on the return of premium or the life legacy has the life insurance benefit, but if you never need care on the long-term care annuity, the annuity value goes to your beneficiaries. So pretty cool. It's certainly a lot better than the traditional standalone long-term care policies that are use it or lose it propositions. If you never ever need care, you don't get your money back. With these plans, with leverage care solutions, you don't need it, you get your money back. So where can I find more information about this? Well, first of all, go to our website, epmez.com, and go to company. And then the videos are there. There's several videos that are very helpful that will help you with that. We work very hard. So there was a podcast that I did. There was a webinar that I did. There was a speech that I gave at a big conference that is on the website. And then there's the ropltc.com site that has a lot of helpful information on that as well. And then get a personal analysis on what it would look for you. Get an illustration from us, and we'll share with you just like I have it broken down here in the newsletter. We'll share with you the 3 options for you and show you exactly what they look like for you. But remember, with leverage care solutions, it is not an expenditure. It's not like a term insurance policy. It's not like the traditional long-term. It's not like your homeowners or your car insurance where you put money into it, you never have a wreck, you don't get any money back. This here, if you don't use it, your family gets the money back. That's the key to all of these plans, and very, very key and instrumental to what you want to do. Another thing you can do is go to the website and order this report, Leverage Care Solutions. It has answers to today's long-term care crisis, which I think in the last podcast I explained to you what the crisis is, considering that if you're over 65 and you're a male, 60% will need to have a long-term care event. If you're a female, 80% will have a long-term care event. So it's something that's going to happen. Not just go to the hospital, a long-term care event that's past the 100 days that Medicare takes care of you. So chances are very, very good that we're going to have a long-term care event. I was going to read just one little statistic here on that too, because I got this from this magazine that I subscribe to, and it says, according to the recent AARP survey, approximately 46% of people over 50 or older incorrectly believe that Medicare covers long-term care. It doesn't. Medicare doesn't cover long-term care. It covers you for the first 100 days, and then it's done. Medicaid will take care of you and provide care for you, but guess what? The government gets to choose what hospital you go to. And during COVID, they certainly chose some pretty bad ones. And that's why COVID, 40% of all deaths in the first year were in nursing homes. And so that's certainly not where you want to be. You want to be with your family. You want to be taken care of in your home, but you don't want to burden them with the cost and the labor. So get someone to come into your home and take care of you. And with these leverage care solutions, all of them have home care. All of them allow you to choose where you want to be, and very critical. So anyway, give us a call. The phone number is going to be in show notes, 888-892-1102. Go to the websites, epmez.com. Check out the videos, and then go to ROPLTC.com and surf around there and order an example for you. Have us prepare an example for you. Well, this is David Phillips. I enjoy being with you today, talking about leverage care solutions. And till next week, we're going to be talking about, I think, a pretty important topic that you're going to want to know about. And that is making poor investment choices and how to kind of find a safe harbor for some of your money. Not all of your money, but some of your money. Because, if we make bad investment choices, we certainly won't have anything to leave to our family, and we'll run out of money a lot sooner. So you want to make sure that your investment choices are correct. And then also we're going to talk about guaranteed income and how we can guarantee income for the rest of our lives without burdening our family. So anyway, David Phillips, CEO of Estate Planning Specialist, signing off for another week. Have a good one.